Right, good morning, good afternoon, and good evening to everyone there. Welcome to live trading session 2.0 of the Trading Vault. So we've done a live trading session a couple of months ago now, and it's back by popular demand. I know you guys would really like to see some live sort of trading and how we set up the charts and everything in real time. So we've got a special 90-minute edition webinar today. If you could please just put in the chat box, make sure that you can see me, see my screen and hear me loud and clear. That would be great. Excuse me. And also a little introduction to yourself, where you're calling in from, what sort of level of trader you are, whether you're a beginner, whether you're a bit more intermediate. If there's any particular instruments you would like us to look at today, that would be great as well. And also, likewise, as always, if you could stay on at the end of the call, just to answer a very short survey, which will help us tailor the future sessions to exactly what you would like and find most appropriate and most beneficial for your trading going forward. So just give a few people a couple more minutes just to come in before we get cracking. We've got a second month of trading, Stephen. Okay, so relatively new, beginner trader, Carl, intermediate trader from Holland. Welcome, Jan. Austria, Vienna, Mitesh from the UK. Good stuff. Right. Beginner trader from the Philippines, Trinidad. Okay, nice to have you here, Mary from the Caribbean. Intermediate. So a mixture of sort of beginners and intermediate traders. And as always, we've got you from all over the world. So great stuff. Great stuff. Right. Cool. Good stuff. South Africa, Lithuania, Scotland. Brilliant. Nancy, do you do live trading every day? No, well, personally, I do trade every single day. I am a professional trader, but no, these live sessions are part of the Trading Vault video series, which occur sort of every now and then. So yeah, we don't run these live sessions every single day, but we do run additional educational webinars every sort of couple of weeks. So yeah, please do sign up to the future notifications for future webinars as well to help you out there. Right, okay, so good stuff. Right, so as always, please do ask any questions as we go through the content, or go through the charts and go through executing live trades. And like I say, we'll try and answer there. We'll try and get through as many trades as possible and stuff. We're gonna look at a lower time frame charts today just to try and see if we can actually get a live trade itself, which would be good. I know last time we looked at generally the 1 hour, 4 hour charts, which is sort of like my chart of choice. But obviously, when you're looking at those sorts of time frames to try and get a trade within that sort of like hour and a half is very difficult. I don't know if any of you followed those trades, but I do know there were a couple of winners in there, which was great. So hopefully you managed to profit from those as well. So um, let's try and keep the questions relevant to the charts. Like I said, we're going to look at a 5 minute chart. We'll look at sort of highly liquid instruments, the ones that are mostly traded. And if you could also let me know if there's any particular charts or anything that you would like us to look at as well. Right, so without further ado, let's have a look. So we're going to start off with euro dollar. And if you've been in these webinars before, you'll know that I generally am looking for areas of support and resistance that have been tested previously. And those are the areas that I'm looking to actually trade from. Yeah, Maria, we'll touch on gold as well. So what we need here, we need to insert an indicator. We need to insert the average true range. 14 period is fine. This will help us gauge how wide our zones need to be as well on this. So you can see here we've got sort of a 6 pip zone, a 6 pip ATR. So we divide that by 3. We want our zones to be around sort of 3 to 4 pips wide. So we're now going to start inserting some zones or finding some zones. Okay, so we've got a clear sort of zone of what has been resistance here, which has been we've now broken out of and we haven't retested yet. Okay, so we're going to look at this. We're going to make them around about 16552. So that's about 3 pips wide. 117.55 to 117.52. We're going to extend this out just to. Okay, and now we've got our zone. You can see we've got a touch here, a touch here, a touch here, and then a touch here before it's broken out. So this area here is a potential area of support that I'm going to a potential area of support that I could potentially look to buy from. Okay, so we'll need to find out our lot size. Here, so we've got a US dollar. We've got so you can find the lot size calculator on most websites. You can just do a Google search. Hopefully, you can see if can everyone see my lot size calculator there on the screen. We've got a $50,000 account size. We want a 1% risk to reward. Hang on a second. Let me just share my screen differently. Then bear with me. Okay, so hopefully now you can see my chart and now you should be able to see my lot size calculator as well. So we've got $50,000 account size. We want a risk ratio of 1. We're going to have a 5 pip stop loss because we want to enter our trade at the top of this zone, which is going to be around that 117.56. And we want to have our stop below the zone because what we're sitting there saying is that we expect this zone to act as support. Okay, so we want to buy when that zone is hit, but if the price moves back below that zone, then we're not wanting to execute the trade, or we're not going to want to be in the trade, and we're going to come out of that. So okay, so we've got a 5 pip stop loss, and we want to calculate our lot size. This is a 10, so to calculate a $500 amount, this is relatively simple math, but $500 risk because that's 1% of our $50,000 account. With a 5 pip stop loss, we're going to be trading 10 lots. Okay, so with that, we can actually find our euro dollar here. We type new order. Okay, we're going to place a pending order in the market at 117.56. We're going to have a stop loss at 117.51, and we're going to target back up towards sort of these lows here, which is just going to be a sort of another 5 pip target. So it's just going to be a 1-to-1 target, and we'll put an expiry date in there of what shall we say? So it's going to be 11:30 UK time. So let's say 2 o'clock because we're 2 hours ahead here on MT4. Okay, and you can see now we've got actually we need to just reduce that 117.55, 117.50 to 117.60. Okay, there you go. Now you can see here we've got our entry right at the top of that zone, which is sort of a retest of these highs over here, which is the breakout area. So we're looking for a retest of this breakout area that has been touched multiple times before. We're going to have our stop below that zone, and we're going to target back just towards these sorts of lows here. Is that clear as to what I'm trying to do there? Please do let me know. Obviously what you could also do if you're not wanting to trade just limit orders, you can sort of set alerts for when price gets into that area. And then once you get the alert, then you can come back and you can look for some sort of candlestick pattern, some reversal signal, something for confirmation that sets up as regards to your trade plan to actually look to get in there. Okay, So, perfect. Okay, so Gavin, as you can see, the recording will be made available. Once Emmanuel once heard someone saying lower time frame is higher risk, and it's better to use higher time frames for lower risk and more opportunity. So, which one would you recommend, Emmanuel? So, I have to say that it really depends on yourself. In terms of it being higher risk, it all really depends on how much you're risking. If you're risking the same on a lower time frame as you are on a higher time frame, then yes, it is higher risk because you're going to be taking more trades, you're going to be opening yourself to more volatility and shorter, sharper trade swings. However, if you manage your risk appropriately, then it's really not too much different trading on any one particular time frame, as long as you stick to your as long as you have the discipline to stick to your trade plans and stuff. You are going to see volatility in the short term when you see non-farm payroll results, FOMC, central bank rate announcements are going to affect the lower time frames more sharply with higher volatility. But you know, you can get that on on higher time frames as well. So it really is just about adjusting your risk to suit your trader profile. If you're a day trader, you're going to be trading off the lower time frames. You're going to be trading higher frequency. Therefore, you need to adjust your risk lower to reduce the amount of risk that you have. And if you're trading a higher time frame, then you're going to have less opportunities. You're going to have less trades, but you can risk a little bit more. So it's more about how you manage your risk rather than one being riskier than the other, so I say. Um, yeah, this is a moving average. This was actually just a standard one on here. I generally use the 8 and the 20 moving average, and you could use that as a sort of like a continuation. I'm not actually sure which one this is. Let's have a look at the indicator we've got. This is a 14 period, so it's not one that I particularly use. So I'm going to change that to a 20. There you go. You can now see that's a 20 moving average. So Gavin says, I trade CFDs. How would that change your order in value only? If so, how would you have calculated the values of the order? Yeah, exactly. It is just purely looking at the levels and adjusting. So visually the chart will look relatively the same. The candlesticks will look the same. You just want to look for those areas of support and resistance. I'm not going to go too much into the mechanics of how we identify them here today because we have covered that in previous sessions. So please do go back and watch those videos. But yeah, it would literally just be working out the value of the ATR, working out your zone, working out where your stop placement wants to be below that zone, and then adjusting your risk and your and the value of your entry stop and target accordingly to the value of the instrument that you're trading. Melvin, no, I don't always go one-to-one risk to reward. I generally look for higher. I'm generally looking for more sort of 1.5 to 1 to 2 to 1, maybe up to 3 to 1 personally. 1-to-1 risk to reward would be my minimum. But what I'm trying to do here today is try and be a bit more aggressive with my entries so that we can actually see some trades hopefully get triggered and get into action. And if I'm being more aggressive, then I'm going to be more aggressive with my targets as well. So just going for 1-to-1. But I'm generally looking for some area of support and resistance to target on my trades. And as you can see here, this has found a mini sort of like area of support here, which is 1-to-1, which is why I'm going to try and close that trade out there. Okay, so that's euro dollar. Let's have a look at gold. That was one of the questions, one of the ones that was requested. We can just leave that order in there, and hopefully we can come back for that one. So again, looking at this, we've moved a little bit higher. You can see that we are trending up. You know, this is a bit more of a sort of continuation. We're looking for a sort of trend-based system. So maybe what we can do one of two things. Okay. We're going to keep an eye on gold, and we're going to see if we can. We'll set that there, and you know, maybe on the 15-minute chart, what we can do is we can look for some pullback to the moving average for a continuation. I think for this level, for in terms of a zone, I'd be looking for a bit of a deeper retracement. Okay, so whilst this could set up some sort of 15-minute continuation pattern on here. You know, if it comes back and connects with that moving average and then sets up a continuation pattern, we'll keep an eye out for that. I think the most appropriate and the best trade will come from a retest of this sort of area here. Okay, so maybe even a little bit lower. So if we sort of test, yeah, maybe test this area here. We've got these two swing highs where we've had decent reactions from. It's broken through. Sort of retest here, but we hadn't broken up properly, so I wouldn't have looked to have traded this retest because we hadn't seen that clear acceptance above that zone. But if we come back and test that zone, that area now, that would be another area that I'd be looking to buy from. So again, so we've got sort of like a 3.6. So we're looking for a sort of 2. Why did you select that range? So Gavin, if you could confirm, you mean on gold? Why did I select this range on gold? Like as in terms of the zone? So why have I selected this this zone as a range? So let me just update this. So we'll do 3697.7 69. Okay. Okay, so want to probably be a little bit wider than that actually. So let's just make that $2.50 wide. Okay, so that looks like a good zone. Okay, so the reason I've selected this zone, Gavin, again, I don't want to go into too much detail. Please do go back and watch the session that we did on how to plot the zones and why we do that. But basically, what we've got here is we've got an area of resistance here where we've had a reaction. Okay, we've got another area of resistance here. So we've had two reactions where the price action, you could say, has been relatively clean. It's gone from the same area. Okay, so it's gone from here, reacted down here. Slightly, we've got a small liquidity grab, but generally from the same area. And then, you know, we've even got a reaction from here as support. Okay, so we've got multiple touches of a zone from a relatively clean point of view. It's been within a couple of dollars of each other from the where it's reacted. So I would consider that a clean level, and therefore that is why I'm selecting that zone. Does that make sense, Gavin? Or and to everyone else? Okay, perfect. Yeah, Alan, there is to access to recordings. You can see there. You can Anne's kindly put the link back in the chat there. Okay. Okay. So again, what are we going to do here? We're going to look for a an entry. So we're going to enter at the top of this zone, which was, if we let me just confirm, was at 3697.7. Okay, so you can enter at 3697.7. You could enter at 3698 if you want to try and get aggressive with it. You could enter at 3697.5. I mean, you realistically, any entry within this zone is a legitimate target, a legitimate entry target. Okay, if you want to be aggressive, I personally am aggressive with my zones. I would always put it at the top. You're going to get triggered into more trades, which means, you know, and you're going to have slightly lower risk to reward trades. But if you wanted to, you know, go for the back of the zone, you can get some really, really tight stops. You're going to miss a lot more trades. You're going to get triggered into much fewer trades. But when you do, you can actually go for higher risk to reward trades. So you might get, you know, you might only hit 50% of the trades that you would do if you were more aggressive. But when you do enter them, you're probably going to get sort of more of those sort of 3-to-1 trades than you are sort of like a 1.5-to-1 trades. Okay. Okay, and then a couple of dollars from each. So for each, just so obviously the price of gold is quoted in dollars. So you know this is at the top of the zone is at $3,697.7. Okay, so it's within, so a couple of dollars, it means it's going to be sort of 3695. So it's a couple of points basically from the actual price. And how do we determine the size of that zone? Gavin, again, this is covered in that session, but basically what we do is we look at the ATR. So we need the average true range on our chart. The period that we use can be anyone really. I use the 14 or the 5 is absolutely fine. It really doesn't make too much difference. You're just using as a bit of a guideline. It's not something that is sort of like set in stone. You sort of find the general high here, which, as you can see, the highs of these peaks is around 3.7, 3.8. Okay, that means the general range of each candle is around $3.8. You divide that number by 2, which gives you 1.9. Therefore, that is around about the width of the zone from the high to the low. Okay, so it doesn't have to be exact, which is why I've gone for $2.50 here. But generally speaking, you want to be in that sort of around sort of 50 to 60% of that value there should be the high to the low of the zone. Okay, so we're going to go with $3.50 risk on this one. Okay. And we're going to go for right. So it's 3697.5. I'm going to go for $3.50 stop, 3694. And we're going to go target up here actually on this one, 3707. So we can actually go for this one, we can actually go for nearly let's go for a 2.5 to 1-ish sort of risk to reward. So we'll go for 37. Oh, let's have a look at this. 3706, okay? And again, we'll put an expiry in at the end of the session. So again, so you can see here, enter is at the top of the zone. We've got a stop loss below the zone, and we're going to target back up towards these sorts of lows here. But it's a front run of those lows there, and that's going to give us a nice 2.5 to 1 trade. But obviously, at the moment, the way this is looking, we need gold to pull back for this level, which is looking a bit unlikely at the moment for this trading session. Okay. If we can have a quick look at euro dollar. Okay, so we are pulling back a little bit, so hopefully maybe we can get a little bit of a deeper retracement there. Okay, is that all relatively clear so far? Any questions yet about the actual mechanics of the trade? Is everyone clear on how we're identifying these orders? Why did I put the gold take profit there? Okay, so the reason I put the gold take profit there, as I said, I'm targeting back towards some area of potential resistance, and I'm looking at this swing low here as potential resistance. So I just want to put it in front of that swing low, as that is where the market could potentially react from. And as I say, it's a good 2.5 to 1 risk to reward, so I'm happy with the risk to reward. That makes sense. And yeah, that is why. So Gavin, if the analysis indicates a pullback to that value, would you not trade on a sell to get to that range as well? So no, I wouldn't, and I'm going to explain why. I'm not sitting there saying that price action and the analysis indicates that price will pull back to that level. Okay, what I'm sitting there saying is if price gets back to that level, then my analysis indicates that this should now act as support. We're clearly in an uptrend on gold, so I want to be looking for areas of support to buy. So I'm not sitting there saying that this is definitely going to pull back to that level. What I'm sitting there saying is if price pulls back to that level, I think it's a good area to get long from and give me a high probability chance of a winning trade to buy, in conjunction with the analysis which says that I'm bullish on gold. Does that make sense? Can you see the difference between one sitting there saying, well, if price falls back to that, then I want to get long, rather than me sitting there saying, well, I think price is, like my analysis says price will get back to that, so I should sell against the trend, by the way, because you're indicating that the trend is up. So you want to, if you've identified that the trend is bullish, then you want to look for areas to get long from, and if price pulls back to those areas, then you look to get in. You're not looking to short to against the trend just because of that, okay? Not trading for the sake of trading from a value of probability. Exactly. So you're expecting price to drop down to take your order and then go back up again. Is that correct? Again, so hopefully that what I've just said there, Tony, clarifies that. I'm not expecting the price to drop down to take my order. What I'm sitting there saying is if price does drop down, then I want to be getting long from that area. And again, it's just identifying your bias in the market, whether you want to go long or short, then identifying the areas that represent good opportunities to buy from, and then if price pulls back to that, then you are ready to execute. Okay. So hopefully that clarifies that. Emmanuel, do you always prefer buy limit orders, one or instant orders? But again, so I prefer limit orders because what I've done is I've identified the area in the market that I actually want to trade from. I don't want to trade from the market up here because yes, I've identified that I'm bullish. But if I just entered instantly at this level here, where does my stop need to be? It would need to be at least below this level here. That risk to reward doesn't really make sense. It's not the best stop because we haven't retested this area yet, and we know that the market wants to be attracted to areas of liquidity. Therefore, it could get that deeper retracement. So there's a variety of reasons is that the risk to reward wouldn't make sense. And if I'm trying to get long from instant execution up here, again, going back to what Gavin said, I'm almost trading just for the sake of trading because I've identified a bullish trend. What I'm actually trying to do is find high probability areas to trade from. Okay, and that will give me my high probability trade setups. Yes, I'm going to take fewer trades, but the trades that I do take will be much higher quality and give me much more chance of success, and also give me better risk to reward trades. So David, that's another good question. For the lower time frame trades, do I have preferred symbols? Yes. Patience is a key emotion, Cole, exactly in trading. David, yes, in answer to your question, the higher, so the lower the time frame you go to, the higher liquid instruments you really need to be trading. The reason being is the higher liquid instruments have much tighter spreads. So you lose you lose much less, and they make the trades much more viable. If you trade something with a wider spread, then you need to go for wider stops to allow for that spread, so you don't get taken out, and it just erodes the edge. So really, you're looking at sort of US dollar crosses, like major currency crosses, your oil, gold, and sort of major indices really for the sort of lower time frames. Those are the ones that I would suggest. And the higher the time frame you go up, you can move into some more, not even necessarily sort of some minor forex pairs, because you're going to have wider stops, so the spread erodes less of the edge, and that's why. So I would sort of look at the ones that we're looking at today are going to be the ones that are going to be okay for lower time frames. Okay. So again, we're half an hour in and we've only got 2 orders in. So I'd like to crack on with some orders if that's okay. But please do fire away with any questions. Okay, so we've got euro dollar. Let me just keep an eye on that because that one is the one that's most likely to trigger at the moment. There. So let's go and have a look at a DAX. So this gives us then we've got a commodity, an index, and we've got a Forex pair then as well. So we're looking at the DAX. Again, you can see, so we've got a downward trend here. Looking at the 15-minute chart, again, maybe look for a pullback to this 20 moving average. I believe this will be the 14 again. Oh no, that is the 20. That's okay. Cool. Right. Okay. So haven't got any sort of like really strong levels here. You know, we've got a bit of a level in this area here, but it doesn't stretch across over here. So let's just have a look. Again, ATR is around 30, sort of 20 to 30 points. So we're going to want this to be sort of like 15, maximum of sort of 20 points. So we do 236.90 to 236.75. That's your 15. That's your 15-point wide zone. I'm just going to stretch this across here just to see if there's any higher time frame levels, which it doesn't seem to be. You know, the best level would be that sort of slightly higher, maybe sort of like trying to retest these sorts of lows here. So again, not the best. No, this isn't the strongest level. But we can work with it anyway. So what we'll do, because it's not the strongest level, we'll leave that one there, and we'll just keep an eye on that one. If price does pull back to it, maybe what we do, if I'm not sort of like so strong on the level, you know, maybe you want to wait for that sort of confirmation. If you've not got the confidence in the level, maybe wait for that confirmation, a pattern, some sort of Bollinger Band reversal, which we've covered, or some sort of continuation pattern on that from that zone. Okay. So yeah, on the DAX, we'll keep a monitoring on that one. So we've got some more questions. Hi, do you think gold will pull back? Bearish? No, gold is definitely bullish at the moment. If we go back to gold, you know, if we go to the higher time frames, you can see we are trading at all-time record highs. Okay, doesn't matter what time frame you go on, daily, 4 hour, hourly, 30-minute, 15-minute, 5-minute, 1 minute, every single one of them is bullish. So that doesn't mean to say that we don't get a retracement, which again is why we want to sit there and say, okay, we're bullish at the moment. We want to wait for that retracement. We don't want to just buy. We want to wait and look for areas that we can actually look to get long from. If you don't mind, please, what are the parameters for your moving average? Do we have to always use it for 5-minute time frame? I personally use the 20 moving average and the 8 moving average, Olawole, but I hope I pronounced your name right there. Apologies if I haven't. You don't always have to use it for the 5 minutes. And again, if you want to use some variant of that, then that's absolutely fine. That's just the ones that I personally use. Emmanuel, what is your best advice on patience while waiting for our setups to appear or for price to hit our orders? If you struggle with patience and you want to, and you sort of like find yourself entering trades, set alerts. Okay, use limit orders or set alerts. The best way and then get away from the screen, because that will help stop you from trading. Why is it not a strong level on the DAX? Because we haven't had a strong reaction from it here. We've had one real touch from it on this side to sell off, which is a decent reaction, but this reaction isn't a strong reaction. So it's not had multiple strong reactions, which doesn't suggest to me that there's a huge amount of order flow there from the institutions. If this had reacted higher, then come down and retested, then I would probably have said that it was more a better level. But because this reaction is only small, we've only had really one decent reaction from that area. So I hope that makes sense. Again, that's covered in the session where we talk about what we're looking for to identify areas to trade from on using these supports and resistance. Okay, thanks, Manny. Yeah, we can look at Bitcoin. Let's just have a look at this GBP US dollar actually first. I just want to have a look at this one, because this one, again, a bit like the euro dollar, looks like one that could potentially pull back to an area that we would want to trade from. So I'd like to get that order in. So again, we've got an order or a level here. Hopefully you can see again why I would be looking at this area of let me input that average true range again. So hopefully everyone can see why I would be looking for that area to act as support. You can see here, okay, so we've got six episodes. Again, we're looking for that sort of 4 to 5 pip wide zone. The ATR is 6 pips. So we're looking sort of like for a 3 to 4 pip wide zone. So we've got 1384 to 1381. That's your 3 pip wide zone. Okay. Yeah, okay, let's just move that higher a little bit. 13485 to 134,815. Okay, hopefully that. There we go. So we just want to take in and try and take this swing high in again. So we've got one really good reaction, pops up, another good reaction up, and this is sort of like a pre-breakout area, but you can see that we've had some good reactions. Pre-breakout area, really strong impulsive push back, push through. This so far at the moment is corrective pullback. So I am looking, this would be a nice area to get long from if we can get long there. Again, this was a 3.5 pip wide zone. So I'm going to go for like a 6 pip stop loss. And therefore, we're going to enter a trade or enter an order, which is 8.3 lots. Buy limit at 1.34. What was that level again? Sorry, 1.34845. We've got stop loss of 6 pips, so we're going to go 1.34785, and target probably back up here, so 792, so about 8 pips. So we've got a 6-point stop, 8 pip target, which is 1.33 R. 34925. Yeah, perfect. Again, we'll place the expiry just after this session finishes. And again, you can see here, order at the top of that zone, stop loss just below that zone, target up here. And again, just to illustrate, you know, if you wanted to be a little bit more conservative with your entry, you know, you could actually enter just at these swing highs here, which is down at 13483-ish. So again, if you wanted to do that, what you've done there, your 13483, your sorry, 13483. You can keep your stop in place because that would be a valid stop. It's below the zone. Your price or that zone has been invalidated if price gets there. But what you've actually done is you've reduced your stop to 4.5 pips, and you've still got now just over a 9 pip target. So you've now increased your risk to reward to 2 to 1 from 1.33 to 1. You've now increased it to 2 to 1. So again, you might miss the trade. Price might come down, hit the top of that zone, and then push higher, and you don't get triggered into the trade. Okay, there's a real chance that could happen. But if price does come and hit your entry, then you've got a better risk to reward trade. So you're going to have fewer trades, but higher reward potential when they do hit. Okay, so that's just something to consider. Okay. So Robin, yeah, we'll have a look at Bitcoin in a second. How many reactions do you need? I would say minimum for EQ, you want 2 reactions, 2 strong reactions realistically. And that can be both as support or resistance. You know, if it's acted as resistance, it's broken through and then had a decent reaction as support, then that's your two reactions. I think you really want sort of 2 reactions to start looking at a level, unless you know it's a really key swing area where you've had, like, you know, it's just one and it hasn't been retested yet. But generally speaking, I think, especially if you're a beginner trader, then look for 2 good reactions before you want to start trading that level. Yeah, exactly, Emmanuel. That's right. What sort of win rate would you expect on this trading method? I would expect sort of somewhere around sort of 60 to 70% once you can get your identifying the zones right. I think, David, it would be a realistic return, sort of somewhere between sort of 60 and 75, depending how good your zones readings are and plotting is, and how you know, depending on how aggressive you are and that sort of thing. But yeah, somewhere between sort of 60 and 75%. How would you working out your lot size? Do you use an app based on a risk percent? Yeah, exactly, Christian. As I said, there's plenty of websites that run lot size calculators. You can go into the Meta store, and you can download them to upload onto your MT4, MT5 platforms, there's plenty of ways that you can calculate your lot size, and it would be a percentage of your account. Cool. Right, let's get cracking. So let's have a look at Bitcoin. Let me have a look, see if I can find that symbol on here. Make sure, see if I can get right. And right, let's have a look at Bitcoin. Bitcoin, where is it? Bitcoin is US dollar. Where is it? There we go. Okay, so let's have a look at Bitcoin. Let's get the right template. Okay, so this is a nice one here. Again, you can see we need to just input the indicators. Now, Bitcoin is probably one that, you know, it's probably a little bit wide to be trading off the lower time frames. But we'll have a look at the levels anyway. So you were looking at 706 points. So you're looking, yeah, sort of 350 to 400 point wide zones. And we've got, yeah, actually, it's not too bad. It's not too bad. Okay, so that's sort of your level there. Something along those, somewhere in that sort of region. I'd probably try and probably prefer to go up here, just because the reactions, you can see you got a reaction from here, reaction from here. Let me just show you on this on the you've got a reaction from here, reaction from here, reaction from here, and then we've broken through and we've sort of pushed back down from there. Okay, so that's sort of what I would be looking for, a retest of this area here. Okay, let's look at the properties of that. Yeah, we said sort of 300 or 400 points. That's 11,470. 114. Yeah, and that's your 400 point wide zone. Okay, so I don't generally normally trade Bitcoin myself. So let me just check the I'm gonna have to work out what the lot size calculator is for Bitcoin, so I can get the right size. Okay, so if the stop loss is about 400, we're going to look for about 600 pip stop. Okay, so this says it needs to be about 0.25. So 0.25 lots. We're going to do a pending order. This is going to be a sell limit order. And we're going to enter at around that sort of 114,300 area. 114, I think it was 330. 600 point stop, 114,930. And a target, you know, on Bitcoin, I haven't really got a level here at the moment. We can go 1-1. He's looking at sort of I think we can go for a 2-to-1 target on this. So 113,130. That's a 1,200 point target. Again, place that there. And again, you can see here, you've got your entry at the top, at the bottom of that zone. So this is a short stop above that zone, and we've gone for a 2-to-1 target on that. Okay. Hopefully that clarifies that one. So we've got a couple of orders in. Unfortunately, the market seems to be a little bit further away from the market. It seems to be pushing away from our levels at the moment as well on euro dollar. we are sort of heading into the sort of lunchtime session where volatility drops, and you can sort of see that here, where we're seeing this really sort of like tight sort of corrective phase of the market, lower liquidity. So it makes it a little bit awkward to trade, or less likely to find a trade. But we just need to be patient and see if we can wait for that price to pull back to those areas. Okay, any other requests for any particular market that you would like to see? So we've done euro dollar, we've done cable, we've done Bitcoin, we've done gold, we've looked at the DAX. Let's have a look at, so we've got a couple of US dollar markets. Anything here? Dow Jones. Yeah, we can have a look at the Dow Jones for you, Maria. Okay, so we've got Dow Jones, we've got Nasdaq, and we've got GBP JPY. GBP JPY is a good one to look at, David. That's generally quite a highly a more volatile currency pair. So let's have a look at that as well. So sure, Martin. Again, so we input the average true range. That comes on here. Again, it's just the standard 14-day average. We look at the price of the peaks of the ATR. You can see that's sort of like around 160 points. Oh, so this is the 1 hour. Actually, you want to look at a 5-minute to see if there's any levels. Yeah, there's a nice level here actually. So although I'm gonna talk to you why I wouldn't necessarily trade this zone actually at the moment. This is a bit more advanced, but I'm going to show you it. So you can see here. Peaks of the zones are sort of 40 points, 38 points, 40 points divided by 2, that's 20. So you want to have your zones about 20 points wide. Okay, so we're going to input a resistance zone. And again, hopefully you can see why I'm got this as a resistance zone. You know, we've got acted as support here, nice push, acted as support again here, a little bit gentler, then pushes through and then acts as resistance. So it's a 20-point wide zone. 4, 5, 5, 5, 4, 6, 5. That's only 15 points, so we can actually make that a little bit wider. Okay. Actually, we don't need to make it that wide. I think 40 is absolutely more than enough. That takes in these lows. Yeah, I think that's absolutely fine. Now, okay, the reason that I wouldn't necessarily trade this one is because we've had a lower high that's made. If it pushes back up, the reaction, although the reaction's decent, what we could end up seeing is, you know, a push higher, pull back, lower high, sorry, higher low, should I say, and then a push up. So you could be starting to see some form of pre-breakout to the upside. So I wouldn't necessarily trade this. Let me go down to the 1 minute. No. So I was just trying to see if we could get a pre-breakout structure here on the Dow and potentially get a short trade on the lower on a really lower time frame, but that's not really the best trade at the moment. But yeah, so the Dow Jones, this might be one that, you know, if we moved up here and we got some form of liquidity grab with a reversal pattern, then I would look to trade it. But I wouldn't necessarily just limit order that one because we put this higher low in. Okay. Again, it's a little bit more advanced, so hopefully you can understand why that would be the case. Please do let me know if you've got any question. And Melvin, again, in terms of moving averages, I'm generally using the 20 moving average and the 8. The ATR varies. So which ATR value do you use? As I mentioned, Gavin, so you want to use the peaks of the ATR. So yes, you know, in higher, basically you don't want to go back too far. This is going back to what is it on the 5-minute chart? This is going back a day-ish, something like that. It's going back to Friday around the same time. So that's the sort of how far you want to look back in the most recent volatility. If you go back too far, you might see big peaks, but you want to look at the current volatility in the market. Okay, the current volatility of the instrument. So just look at the peaks of the most recent data. Okay. Cool. How do you see the pips for Bitcoin since it's different from gold? Well, their pips are different for all instruments. So you just need to, work out the difference. Yeah, I mean, you'll get the product data, the instrument data from here as well. If you look at the specification, go on the euro dollar, you can sort of see contract size. You can see, and that will tell you the it doesn't actually tell you. Oh, hang on, we should have pip size here. Minimum volume. It doesn't say your pip size there, but generally speaking, it's yeah. You'll have to look at the product information or the product specification. It should tell you the difference in pips, and then you can input that into your lot size calculator. And generally speaking, most lot size calculators will adjust for automatically adjust for your pip size for you. Okay. Again, just want to make sure you don't go too off topic. Any thoughts on using multiple indicators? I think if you use multiple indicators, I think you overcomplicate the process. The number of traders, basically, it's a very common theme amongst certainly beginner traders that you look for indicators to try and over optimize and give yourself the confidence. But certainly the vast majority of traders, professional traders that I know, their charts, just more experience they get, the better their results become, the cleaner their charts get, and the less indicators they use. Okay, so it's not about more indicators. I think it creates analysis paralysis. I think it creates confusion. You want to try and keep it as simple as possible, and yeah. So that would be my opinion: is to try and get used to not trading with so many indicators. Having one or two is absolutely fine, but personally, I think it's yeah, you want to try and keep it back. Okay, right, let's get on. So GBP JPY was another one that we want to have a look at. Have we got it up here? No, let me get that one up if I can. GBP JPY, there we go. Yeah, this is a good one to generally trade. It's quite a volatile pair. Okay. It is a good pair, but it doesn't look like we've got great zones to trade at the moment. Okay, so again, put the ATR on. Sort of about 80 or 8 pips, so we want 4 pip wide zones. And this is about 4 to 5 pips, and this is let's go 41. 199.36. There you go. That's about 5 pip wide zone. We'll just extend that out a little bit. Okay, that's about where you want to be trading. You can see again, reaction as resistance up, reaction as resistance up, reaction as resistance, breaks through, tests it as support. So again, we'll be looking at GBP JPY. We've got $50,000 account size. So with this one, we've got a 5 pip wide zone, so we'll probably go for like an 8-point wide stop loss. So we want about 9.2 pips, 9.2 lots. So did I say sorry? 9.2 lots. Pending order buy limit at 199.41. Stop loss of 8 pips, 199.33. Target, we're going to just do 10 pips here, I think. Let's have a look at that one, how that one looks. Yeah, I think that looks absolutely fine. Again, we're going to just target back towards these sorts of lows here. I think if you wanted to target back towards these sort of swing lows on these ones, you wouldn't really have your 1-to-1, so wouldn't necessarily be a great trade. So we'll just target back towards these sorts of swing lows here, and then you've got your 1.25 to 1 risk to reward trade. Okay, so hopefully you can see that the process that I'm going through on each individual trade is very, very similar. It's identifying the support and resistance, identifying the high probability zones, working out through the ATR how wide that zone should be. That will allow me to create the zones. Then I know exactly where my entry is going to be because my entry is going to be at that zone. I know exactly where my stop's going to be because my stop would be below the zone if I'm looking to buy, or above the zone if I'm looking to sell. And that is where the zone becomes invalidated. And then we're targeting somewhere between 1 and sort of 2.5, 3 to 1, looking for that next area of potential support or resistance as a target. Okay. Please do let me know if we've got any other questions at the moment. Use MT4, is that habit or preferable to suppose using? I use MT4 and MT5, Gavin. So yeah, it's just what we decided to use for today's session. How is trade different from a previous pair that created a higher low? I asked since the price is creating. Yeah, okay. That's a very, very good point, Erwin. So the reason being, if you look at this is a trend. You know, we've got impulsive push down, corrective phase, impulsive push down, corrective phase up. So we're sort of trending here. Okay, so this is much more of a trend. This, what we've got here, is much more of a range. Okay, much more of a range here. Okay, and therefore, you know, when we've got a range, we're likely to see that, like, you know, we can play it. It can go act as support and act as resistance. There, it's not. You know, I understand what you're saying in terms of this one has got a lower high than that one there, but what we're sitting there saying is you can see that we're in a range rather than sort of some trend here. If you see higher lows in the trend, you might be seeing sort of like that trend reversal, whereas in the range, you're just continuing to play the range. Hopefully that makes sense on that one. It is right, and maybe, like, you know, if you if you're new and you want to stop yourself from creating confusion, then be strict on your, if it's got a lower high or higher low, then don't trade. But this is just, I'm trying to be aggressive today to try and also get some trades, which we're not having too much luck in at the moment. But ultimately, that's the reason. This is a range, so we're happy. I'm happy to play the bottom of the range. And again, the reason why I want to play the bottom of the range and not the top of the range is because overall, I'm more positive on this than I am negative, because we're trading above here. So ultimately, I'm more bullish on it than I am bearish. Therefore, I'm looking to trade long more than I am to trade short. Hopefully that makes sense, Owen. Is there any way at all to have dark theme on easier for my eyes? So this is the dark theme, I believe. Is it with the background dark? You can change it in your properties, Krishna, for the theme. I use yes, Alan. I do use TradingView as well. I think TradingView is great. It's got a lot more tools and stuff like that. But for today's session, we are using the MT4 platform. That's all. So Cole, how many trades do I have set up at any one particular point in time? So me personally, again, so today, the theory and what I'm trading with you here today is how I've set up my charts. I generally trade off the 1 hour time frame rather than the 5 minute. Okay, so me personally, I'd normally have, I look at 12 to 15 instruments, and I would generally probably have, I don't know, anything between sort of 5 and 8 orders each day. Sometimes it's a bit less, sometimes it's a bit more, but that would generally be the thing. Again, there's no guarantee that those orders are getting placed, and I can have those orders in multiple days running before they actually get triggered, or I believe they've been invalidated and therefore I'm not trading them. So yeah, it all depends. But if you're trading on 5 minute time frames, you're going to have it all depends on how many instruments you're looking at, what time frame you're trading on. Which time frame is best to identify patterns? Again, Harsha, it all depends on your style of trading. It all depends on the time that you have to commit to the charts. There is no particular time frame that is best. It's what time frame is best for you and your style of trading. So, Emmanuel, as a full-time trader, as we are drawing the zones, is there zones particularly where we are can draw out to be correct that price was short? There's no sure thing in trading, Emmanuel. We're literally playing probabilities. We're saying there's a higher probability. Okay, there is no silver bullet. There's no sure thing. There's no guaranteed zone that is going to work. Okay, it is purely based on probability and creating an edge. Okay, there is no such thing as a guarantee in trading. Okay, so let's get on. We've got how we're getting on. So we've done an hour. So hopefully this extra 30 minutes will allow for us to get some more in as well. As I say, normally we've done an hour of these, but we wanted to extend it to give you the guys a chance to ask as many questions as you can, and get us to go through as many chart patterns and possible and try and get a trade as well. So let's keep looking. What other? There was an I think there was a request for Aussie dollar. Again, if you've got any other charts that you'd like us to look at, please do let us know. As I said, Emmanuel, the reason I didn't set a pending order for the DAX was because I didn't think it was a strong enough level. So I'm going to keep an eye on that, and if it pulls back to that area, then we can potentially look to trade it. At the moment, it's not coming back to that level at the moment. Okay. Okay, so Aussie dollar. Let's have a look at the 5 minute chart again. Okay, this is a horrendous chart. Again, when you look at this chart, don't try and force a trade. There is no clear, clean level on that chart there. You can sit there and even if you just sort of like, go down, 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 nothing where it's like really, really clean and clear. You can go to higher time frames. Maybe something in there, but you can see just the levels are not very clean. So we're not. I'm. If I saw this chart when I'm looking through my analysis in the morning, I would just move on. I wouldn't be looking to trade it that day. Okay, so I'm not going to force something just for the sake of it. And this one, I am still trying. Although I'm trying to be more aggressive, we still do have to make sure that it fits in with our theory. And this I just cannot see anything here. Coal, yeah, gold. We have already looked at gold. And we have got an order in here, as you can see. We're looking for a pullback to this sort of swing high, these sort of swing highs here. So we have already got an order here, and you can see it's like resistance, resistance, turn support, and pushed higher. Unfortunately, it's pushed even higher since we've started on the call, and therefore it doesn't look like it's going to move back. Right, okay, Carl, what are my thoughts on Fibonacci levels? I think if you want to use Fibonacci's as a guideline to look for your entry price, I think it's absolutely fine. If you've got a Fibonacci, I think you have to, identify these zones, and then if a Fibonacci ties in with that, then absolutely go for it. I think that's a thing. I think again, going back to anything, me personally, this is my own theory of trading. Obviously, there are other ideas and other ways to trade out there, but my personal opinion on trading and things is you want to be looking for these really high probability areas of trading. This is where institutional order flow has entered the market previously. It is where it is likely to be there again. So if you can find a Fibonacci level that ties in with that area, then by all means use it. But I wouldn't just use a Fibonacci level randomly just because it's a Fibonacci level. Okay, I think that's what gets people into trouble. On a 5-minute time frame, what expiry time would you usually use? I think generally speaking, like for that trading session. So in the European session, what I would do is I would set an expiry time if I'm looking at it at 8 o'clock in the morning in the UK when the European is opening. I'll probably set an expiry time of around sort of 12, 1 o'clock, and then I'd look again for the US session at around sort of 2 o'clock before the US opens. And if if I still believe that level is valid, then I would put an expiry time of sort of like maybe 6 o'clock, something like that. So you probably, a few hours is fine, but you want to be monitoring it. And obviously, if there's some high impact news events, you need to be aware of that. You want to cancel your order around those areas, especially if the price is close to um, that level when the high impact news is going to come out, because otherwise you can see you get spiked in and out of the trade very quickly through volatility in the price and a widening of spread. So yes, something like that. Risk reward ratio for it, anything from 1 to 1 to 3 to 1, generally speaking. And Stephen says, you often notice that trends in gold and silver often mirror each other. Is that valid? Yes, they do. They are generally in sync, not 100% in sync, but they do move in sync with each other. Gold is used much more for sort of hedging and as a store of wealth, whereas silver is a little bit more influenced by sort of industrial demand. But yes, they often do generally sort of move in the same way, but not 100% of the time, but generally speaking, they do. Okay, so Christian, hopefully I've answered that question already. What sessions do I trade or recommend for again, Emmanuel? So like again, it's about you, where you're from, what sort of what suits your style. I'm from Europe, I'm in the UK, I'm in London, so I trade the UK, the European and the US sessions. But if you're in Asia, you want to be trading the Asian session, and potentially, maybe you'd trade the US session, or maybe probably European and Asian session, depending on sort of like your time frames and stuff and that. So there's no one particular one. It's about what fits with you and your trading style. I mentioned the market sometimes have a lull before lunch. Is there a best time to study the charts? So again, yeah. So again, you can just see it across these charts here, right? Okay, this is the European Open here. Okay, this move here. This is when you're going to get your better opportunities. Breakouts and stuff like that. Higher volatility. Aussie dollar. This one's just a terrible chart anyway. GBP JPY. We are sort of range bound. Dow Jones, we got this sort of push down again on the European Open, pullback volatility in that sort of session. Again, here, this was probably this is the 1 hour chart actually on Bitcoin. I didn't put it onto the 5-minute, but yeah, this, let me have a look. We'll come back to Bitcoin actually and have a look at the 5-minute chart and see if there's something we can do. Again, GBP US dollar breakout on the European Open. Your most of your volatility comes at session opens and session closes. Okay, so as the European session opens, as the US session opens, as the Asian session opens, that's when you're going to experience higher volatility. And likewise on closes. So, and then you get this sort of like lull around lunchtime, volume dries up, you're much more likely to see the market digesting itself in that sort of area. Okay, so usually after how long after news will you enter a trade? Again, I would probably sort of sit there and say 10 to 15 minutes. The market, generally speaking, sort of settled itself down a little bit. If the market has, or the news or the economic data has missed by a long way, then you may want to give it a little bit more time. And sometimes you can see these sort of like really two-way moves and really sort of like volatile, like really sort of like highly volatile, highly choppy markets after the news. Again, you might want to leave those ones. Generally speaking, I would give it sort of 10 to 15 minutes before I start to trade. And equally, you know, again, especially at the moment with rate announcements, don't pay attention so much to the rate announcements. You want to listen to the press conference and the minutes releases afterwards. That is going to what is going to make the market react more than the actual rate announcement itself. And what about before news? How many hours before don't enter? Again, that depends on what sort of time frame you're trading on. If you're trading on a 5-minute time frame, you know, you can probably get away with entering a trade 30 minutes to an hour before, because it allows you enough time for the market to move before the economic data is out. If you're trading off an hourly time frame, then you know you probably want a good hour or two before the news, before you sort of like come out of it. If you're trading a 4-hour daily, then actually really the news shouldn't impact too much, because you should have a wide enough stop to allow for those the volatility. Do I trade red folder high impact news? If no, why? If yes, why? Again, so that's not a straight answer. Generally, it depends on what time frame I'm trading from, how far the price is away from that level. I think for beginner traders, it's probably best just to avoid red news at the time, unless you are specifically trying to trade a news reaction strategy, okay, where you're trying to trade sort of spikes and extended moves into things. That's the case, then fine, you should trade it. But if not, then maybe avoid trading red news until you are okay and comfortable with managing your risk and managing your trades around high volatility from red news. Yeah, let's look at US dollar CAD. Like I say, we have got 20 minutes left, so I want to make sure that we can try and be nice if we can get a trade. At the moment, it's looking a little unlikely. Maybe, yeah, so let's have a look. Get here. Okay, so US dollar CAD. Okay, yeah. Okay. Okay, so this one's a little bit closer. What am I trying to do here? So I'm going to add an indicator, average true range. Okay, so again, we're looking at the peaks of this, which is around sort of five pips, 4 to 5 pips. So we're looking at sort of 2.5 pip wide zones. And that's a 2 pip wide zone. So that's okay. Okay, so we've got a 2 pip wide zone on US dollar CAD. We've got a 1.2 pip wide spread. So again, we're looking really, that's probably quite wide. You know, your spread is more than double the width of your zone, which is quite wide for the width of that zone. So we'll just have to take that into account when we're looking for placing out our stop. So let's go US dollar CAD. Probably want a sort of 4 pip stop. Yeah, 4 pip stop. So you want, sort of generally speaking, a 3 pip stop, but you need to add a bit extra for the width of the spread. And then we can place an order. Okay, so it's coming out at 17.25 lots. We're going to go buy limit at 1.3800. Going to have a stop loss at 1.3796. And we'll target 1.380. Because we've got this wide spread, we'll go for that aggressive target of 1-to-1. Again, we'll just put in, and again, so there you can see we've got an entry at the top of the zone. Again, what we're doing, we're looking at the same process: resistance, 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 breakthrough, tested as support. We're going to keep that as support. The overall sentiment is bullish. You can see we're sort of generally speaking in an uptrend, so we want to look for areas to buy. So that is the area that we're looking to buy. Okay. Hopefully that makes sense. We're only sort of 6 pips away from that one, so hopefully, maybe, you never know, we might get something from that. If we just have a quick look, gold's quite a way away. Aussie dollar we didn't trade, so let me close that one. GBP, JPY, Dow Jones, Bitcoin. We'll have a look at We'll have a quick look at Bitcoin on the lower time frames again. GBP US dollars moved away, and Euro dollar has definitely moved away. What are your thoughts on opening range breakout and opening range breakout retest? Have you used them and have you seen success with it? Are you talking about in terms of sort of like indices and stuff, Leon, in terms of opening range breakouts of the sessions? I know people that do use that. Me personally, if that breakout ties in with one of my zones of support or resistance, then yes, I'll trade it. But that is the way that I trade. So that is what I look. But I do know people have very high degrees of success trading the breakouts, and not just trading the breakout itself or a breakout retest, but also trading sort of liquidity grabs and stuff like that. So maybe what we can do in a session is talk about strategies around opening range breakouts. Maybe that's something we can cover in a future session, and we can dedicate to that. So yeah, for equal, let's have a look at Bitcoin, and then we can look at Ethereum, and yeah, we've still got 15 minutes, so we should be able to get that in. So let's go down to the 5 minute. And realistically, actually, yeah, Bitcoin, you still want to pull back to this sort of area here, maybe even a little bit lower than where it was before. So 200-point wide. So again, you'd want to be a retest of this breakdown of the zone here. This is sort of where I'd be looking to trade from. So it's still within the zone actually. So I'm going to leave that zone where it is. I'm happy with that for Bitcoin. So let's have a look at Ethereum. If you can bear with me 1 second, I'll just get that up. Okay. Okay, so this is 1 hour chart. Let's have a look at the 5 minute chart. Okay, so again, just having a look here. It's not the strongest level, this one, but potentially, we've got a move down here. This would have been some sort of some news. I'm not actually too aware of what caused this spike down on cryptocurrencies this morning. I haven't seen the news. But that's a sort of level that you'd be looking for a retest of. It's not the strongest level because it's only got one reaction. I really prefer it to have two touches. But that would be the sort of area that you'd be looking to short from. Again, you come in, you've got a clear negative bias in this. Push down, sideways market, push down, sideways market. I mean, again, you could potentially look for some form of a continuation pattern. We haven't really got that on the 15 minute, and 1 hour is not setting up at the moment. The 1 hour I'd be looking for more. This is a much stronger level on the 1 hour actually. This is a much stronger level on the 1 hour chart. Because can anyone tell me why that is a much stronger level than the 5 minute level that I just identified there? So the difference between this one and and this level here? Can anyone tell me? Exactly. Both. Yeah. Arnold, Gavin, Farik. Yep. Jan, Alan, David. Yeah. Exactly. You've got one test here of this level. It's not the strongest reaction. Whereas on the 1 hour time frame, you've got multiple levels, and you've even got you've got stronger reactions from it. And even when you come down, we sort of retested it here and got a strong reaction down. So that would be the reason why. So again, on this one, you would just place an order at the bottom of the zone with a stop above it. But I'm not going to place that one today because it's on the hourly. We're not going to get back up there in the next sort of 10 minutes, unfortunately. Okay, let's have a quick look. Unfortunately, it doesn't look like we're going to get a trade today. Either, but these like keep an eye on these levels. If they, as long as they don't have price action move too far away from them, as long as they don't get any sort of price action chopping around them, these levels will be valid. Any other probably got time for one more chart and a couple more questions, and then we can we'll wrap today's session up. So by the way, how do you add the symbol? Very simply, Farik, on MT5, it's quite simple. You can just type it in at the bottom here. But on MT4, if you right click your mouse, it brings up this drop down thing, and then you go to symbols. It will bring up a list like this of all the symbols that are available to you, and you just find it on there. So if we wanted to look at Aussie dollar CHF, you can see the ones highlighted in gold. Those are already on that list. And the ones grayed out are the ones that are not, and you would just highlight that and click show. Or if you want to remove one, you can highlight it and click hide, and then you can see here we've got it there. So hopefully that helps. What could you just expand, Carl? What do you mean? What strategy is that called? I mean, this sort of like, this is more of a theory around what the way that I trade. So it's a support and resistance sort of strategy. It's not hasn't got its own particular name. It's just using support and resistance to identify key areas in the market, and then you can use patterns or limit orders to enter the market in those areas. Can I explain the average true range? Yes, the average true range is a volatility indicator. It tells you basically the average of what a candlestick moves in each time frame. So if we're on a 5 minute time, the average amount that one candle will move in 5 minutes. In recent times, so it's like a recent volatility index. If we're on an hour, it'd be tell you the average size that the 1 hour candles are at the moment. So it just allows you to gauge how much movement in price you can expect to see based on the current volatility in the market in one particular candle. I like that one, David. Maybe I will coin that one. Ross's super special support and resistance strategy. I like that one. So yeah, maybe we'll call it that for now. Cool, good stuff. Right, let's have a look at one more chart. We've still got time. Any shout outs for we said somebody wanted to see the Nasdaq, didn't they? So let's have a look at the Nasdaq. Okay, so Nasdaq is breaking out at the moment. Okay, so we've you can see here that we're breaking out into new time highs. We're pulling back. This chart is not, again, it's not the best, to be fair. Let's have a look at a higher time frame. No, it's not really the best. Not really the best levels, or yeah, to trade. Let's have a look at the S&P instead. Maybe that will give something a little bit better. Again, looks a little bit choppy to me. Yeah, no, nothing really on that one, I'm afraid. Okay, guys. Any questions? And like I say, let's see if we can get one more. New Zealand dollar US. This, I tell you what, I'm going to look at this one. This is my favorite trade that I'm looking for sort of today. I'm looking off the 1 hour time frame. What we've done is we've seen some strength coming to the US dollar off the back of FOMC and jobs data at the end of last week. Although we got the rate cut that was expected, the Fed were a little bit more conservative about future rate cuts for the rest of the year. So we've seen this sort of dollar strength come in, and you can see we're trending down. So what I'm looking to do is looking for, sorry, excuse me, looking for retest of this area here. This area here, I actually, had a winning trade on this sort of spike here. And now, because it was supported, so again, we can see resistance, really strong reaction, big reaction, move up, a fairly decent reaction there before breaking through, and then we've got a nice spike down into it and a strong reaction there. We've now broken through again, so I'm looking for a retest of this area here. ATR at the moment is around 18 pips, so we're looking for sort of 10 pip wide zones. We've got 59.17, let's call it 59.18 to 0.590, let's go 08 because that's 10 pip wide, and then that would be your sort of zone. New Zealand dollar, US dollar. You're going to go for a 15 sort of pip wide zone on this. New order, 3.3 lots, pending order, sell limit. So we're entering at 0.5908. We're going to go for a 15 pip wide stop, so 0.5923. Go for a 20-point target, 0.5888. And this one, is pretty much valid all day. So, you could go up to 8 o'clock tonight, sort of thing. Again, what have you got here? You've got your entry at the bottom of the zone, your stop where it'll be invalidated, targeting back down towards this sort of like these sorts of highs here and here, and that's your target. That's a 1.33 risk to reward zone. Okay, that's my trade for the day. That's my trade that I'll be looking at probably for most of the week, unless something drastically happens. So that's hopefully, something that you can look at. Hopefully you can see why I'm looking at that. Again, strong reactions from both sides, and that's it. So I appear not to be using TTP on trades. What do you mean? Could you expand on what you mean by TTP, please, Gavin? Had a dream of the SPX having a decent pullback. However, unfortunately, it didn't happen in real. Yeah, we just need to exercise patience. Eventually, it will happen. Okay, all the markets will pull back at some point. We just have to be patient, be prepared, and wait for our levels and exercise that patience. So, as you can see, the events team have put in the details for signing up for the next webinar. And also how you can sign up for a live trading account, plus also that promotional referral scheme that we have got with VT Markets at the moment, where you can get $200 per referral. So if you've got friends or someone you know that would like to start trading, you can get $200 from referring them. There again, the link for that is there, and also how you can join the future webinars and also join a Telegram channel as well. So lots of information now. So not necessarily. Sometimes I may scale out of trades, Gavin. Yeah, so trade and take profit. Yeah, sometimes I might scale out of trades, depending on how the market's moving and stuff. But that's a little bit more probably for another day. We can talk about that one. So Martin, as I say, there's a link's been put in there by the events team for the future sessions. So hopefully you can just click on the link and it'll give you all the details about that. Emmanuel, do I place all my pending trades for the whole week, then wait, or do you place trades per daily? I personally Generally place them per day. Again, I'm trading off generally the 1 hour time frame, sometimes a 5 minute, but very rarely these days. I used to trade off the 5 minute more, just because of the time that I'm spending at the screen is less. These days I'm trading off the hourly. So I tend to delete my orders at the end of my trading session, and then I will re-input them the following day. It's like, a handful of orders, so it's not too time consuming. But if you're off trading off a higher time frame, 4 hour or daily, then yes, you would leave them in for the whole week or the month, depending on your time frame. Okay, great stuff, everyone. We are out of time, but thank you very much for taking your time to be here. Hopefully, we got some more information in there in that 90-minute session. Again, please do stay on and answer the short survey. It will really help us tailor these sessions for you. Wish you all the best in your trading, and I look forward to seeing you again very, very soon. Cheers, everyone.